Hey guys, welcome back to another trade breakdown video. This is going to cover off the thoughts I talked about and traded in the London session, and then some of the ideas that I gave after the session or for after the session. Um, some lessons learned, and overall, it's a pretty good day, but there definitely were some things that could be improved. So I'm just going to dive in here. Took 4 trades overall. Trade number one, this one was 2 positions actually. So it was 22 pips plus 12 pips, and then took a loss, which was annoying on this in the stream at the end of it. Gave it a second chance. A little bit annoying because I traded the profit from the previous one, so I made it back plus more than closed it when it went a lot further, and then had a trade going for pound Aussie, which was just a set and forget based on fundamentals. So let's dive into the chart. So I haven't done anything here. I've just left it as pretty much as it was, because I only just got back to the computer now to have a look. Rest of those done on the phone. So let's just bring it back. And there was a lot of missed opportunities too. The day was pretty killer overall. So what am I doing? Move this thing. Let's cut to the chase over here. I want to snip this candle off as well. So cut that one off. Beauty. Okay. So German 40. This is how the lay of the land stood pre-London. This is when I got to, I got the charts about 20 minutes beforehand. And was just, I got to the charts here, right here at this point. This is when I was just having a look and just planning out some things. We had the day before. Sorry, I haven't done a video, by the way, for a while. Life got in the way, so there was quite a few that I did want to go through. Especially yesterday's stream. I would have liked to have done a trade breakdown video on that one, but didn't get a chance to. So yesterday was absolute precision in the time, like where I thought the high of the day would be. So we had a little faint line. This is a Asian resistance that was created. Thought this area would be swept, and then we could react from there. It reacted definitely. It hit it to the pip, and that level was based on the 30-minute chart, looking like here, like this. So you're pretty sure if you've watched a few of these now, you're getting used to how I'm doing things. If this is for the first time you're watching, then definitely give the video a bit of a like and a subscribe. You'll see a common theme and like how I'm drawing things. Okay. So this was a resistance created in the New York session for the previous day, the previous day being the 5th of August. So that was your Tuesday. We had a rejection wick here, this candle number 1. And I like to do these in pairs. So where's my second rejection candle? This one over here, number 2. So because of rejections going from the top side, the way I'm drawing my zone is from the high of candle number 1 to the open of candle number 2. That's going to give me a resistance. Okay. Now, price, if I did the same thing here. Okay. So here's a rejection candle. This is like a beautiful bearish engulfing candle, liquidity candle. And this one is very marginal, but this one here created the higher high than the candle to the left and then closed bearish. But it's Asian session, you don't really tend to get too much volume here, but this was an area of manipulation. Because it's an Asian session, I'm well expecting the Asian high to be swept. And because there's a beautiful zone above it, I thought that this would be potentially the high of the day. Asian had pushed down, Europe had pushed down, London had pushed down, and what we know is that unless there's a good fundamental reason for this to be going down, New York won't go down. So it does the opposite. So Asian down, Euro down, London down, NY breaks out the low, traps early sellers or breakout sellers, and then basically just punishes them. So what that led me to is just another day, do this again. So what I had looked at was inside of this area, New York had been pushing down, Asian had been pushing down, Euro had been pushing down. We'd created a bit of a doji here, But what we'd also had is we'd been tapping into the support zone here for quite some time. If I go to the 4-hour chart, what is this support zone? The support zone is this candle, this 4-hour liquidity candle. Okay, so I've just done a GAN box over the entire wick, which I normally do. The 3 points of interest here when you get liquidity candles like this are the open, the mid of the wick, and the low. Okay, so they're my 3 points. Now, there's a lot of liquidity trapped inside of this wick, hence the name liquidity candle. We also got like a little bit of an order block below it. And when you have a pile of liquidity, the analogy I like to use is this liquidity pool is like a plate of pancakes. Okay, so if someone comes up to it, often they'll reach down with their fork, they'll pinch a pancake, and then they'll go up and eat it. Then they'll come down and they'll pinch, go a little bit like this pancake's gone, go to the next one, go up and eat it, go to the next one, go up and eat it, go to the next one, go up and eat it. And eventually, once you get to the bottom of the plate, you've got two choices. You've either got enough liquidity or you break through this and you're looking for the next plate of liquidity below it. So what was happening here was we had the first touch. When was this? This was the Monday touch. Tuesday. Then yesterday we had a tap. And then if you look closely, I'll zoom in over here. Okay. So we've tapped and we made a low of the day. Then the next day we tapped and then pushed up, rejected. Next candle came down, filled the wick, made a little lower low. Okay. Then we're tapping into this area again a fourth time. So if we're coming back down towards this zone again, and we're breaking this low, there's a very good chance we're going to push a little bit deeper again. Okay. So that was the idea behind this, was that we're constantly pushing through and slowly eating away the liquidity that's inside of that wick over to the left. And fifth time, there's a good chance we're going to break through and we'll go to the next area of liquidity. So that was the order block down over here, right? Now this red zone, oh shoot, I don't want to move that. There we go. That red zone is, if you look across the board, okay, we notice, well, you should notice, I noticed that it is an area where price has constantly rejected or broken through. Okay, but it seems to be just a very sensitive zone, reaction zone. That's what you want to call it, a reaction zone. So back to the 30-minute. This was the lay of the land. The last 30 minutes coming into, this is Frankfurt Open right now, okay, between 7 and 8 a.m. UK time. So you can see the time down here. This was at 7 o'clock to 7:30. Now, this is the Frankfurt Open candle. A lot of volume in this period of time. Asian had pushed down. There were, I think, fundamental reasons. There was like oil has been a bit bullish as well. So that was sort of driving things down here. Let's go to the 5-minute time frame. That's where I entered on. Looking at the 5 minutes, the main one is that when I was at the charts, I noticed that this really quick move up, and this candle here, this one here, moved very quickly, right on the open, 7 o'clock. So 7 to 7:05. It moved 20 pips straight up. So that's kind of like a liquidity grab. Let's go look at the 3 minutes. See the 3 minutes just powered straight up, just boom, boom, and then moved down. So what was happening was that this looked like a fake out. This looks like a classic fake out. So there's a very good chance that you trade away from this wick, because just imagine this candle here, this one here. Imagine the 10-minute chart. So 10-minute chart looks like this, like a rejection wick. So I wanted to trade away from that, because this one here gathered liquidity and it's probably going to offload it somewhere. And price goes from one liquidity point to another liquidity point. What we had was this candle closed below these wicks. Okay, so it's all looking pretty good right now. So the idea here behind it was that it just looks too obvious for a sell. And what will happen was, normally if you trade the low of that candle, you've got to survive the pullback. So that was pretty much it. As soon as it wicked back and it started pulling back, I thought this is very good opportunity. So entered a sell on when it pulled back. Okay. And then as it started, so basically once this candle had closed, I don't normally like to enter on the close of a candle, but when this candle, let me just move it. Look at the 30-minute again. Once this 30-minute candle would close, I thought that was very simple for it to do a wick fill, break this low, and then push down into like this lower area. Okay. So that was the idea. And enter two positions on this one. So first one was when it opened, and then the second one was when it was breaking this area again. So I'll do the 5-minute. We'll just go through it. So 5-minute, first 5-minute of the next candle, push down. We're in the trade. Then as it broke the low, enter the second one, and just took full profits there. Just because it's pre-London, and normally London's going to do its own crap. It's going to like push down, break euro low, and probably retrace just because the size of the Asian session. Asian session moved down 50 pips, so good range. Europe pushed down. Now, is London going to sell the low? No, unlikely. London's going to manipulate the low and then have a correction. So that was the correction. So, it's just a quick jab into the market and out. It was done in 10 minutes. So very nice. Okay, London here. Let's see what London just did then. London then opened. This is the London open candle right here. Swept the low and then had a strong reaction, just punishing those people looking for breakout sells. Okay, then let's go to the loss. Price we had like price ranged for ages. This is range city. And then what we got was some price pushed up. There was a good opportunity over here, because on the stream, I had this a little bit lower like this. And this was the little consolidation and Asian session. So as price pushed up from here, that I was like, I had to actually grab my one hand. I went to enter on the sell. And because I thought it was just a bit impulsive, that one hand had to grab the other hand to get off the mouse. So I didn't take that trade. Just because I thought it was just a very impulsive decision that I saw that. And I saw this here late. And I thought that's good for 30 pips. Good for at least 30 pips. But it's not a trade I want to be taking necessarily, especially after I've had a winning trade. I don't really like to do that. So I caught myself, man, even though it would have been an absolute perfect trade, it's just not the kind of trades I want to take. So good lesson there, good restraint, even though it's a winning trade. Then price pushed up here, pushed through it because with same analogy, but upside down for the pancakes. We tapped into it. And then the next one, we pushed higher again into it, consuming all of the liquidity. Then third time it's tapping, it breaks through and it's got to go to the next one. So my trade on this one was I waited for price to get up into this zone. It was right over here. And I thought when price tapped into here, what I was waiting for was it on the 3-minute or 1 minute? It was on... where was it? Yeah, it was right here. Yeah, this is it. This was where it was. Yep. So the idea was once price had took out the Asian high. No, that's not it. We haven't got to it yet. Yeah, we haven't got to it yet. So what I was waiting for was this area to be tapped into. So this was a 4-hour doji high, and I was waiting for it to take this out. And I had a little liquidity. So these two thin back lines, there were points of interest anyway. You can look in the stream if you need to. But I wanted to wait for this to be taken, and then I was looking for the reaction off of it. So price came up. There was another missed opportunity here. So once price had tapped into this area, consuming it, I was saying that this was the V shape, and then look for the second V shape to take. So could have taken a buy here. That was another opportunity with this volume. I just didn't get into it. So another missed opportunity. Then waited for price to tap up to here. Okay, so let's have a look. Price got up to it. Okay, here we go. See how it took it? Okay, tap, tap. And I believe I entered on the next one. I think this was where I had entered. Second. No, it wasn't. It was up here. This was the area. I was looking for it to enter off of this area, and I had my stop loss above it. So let's push up. It was about 771 where I got in. Yes, I'm a little bit behind, sorry. 5 minutes. 5 minutes tapped up into this area, 771. Yeah, it was here. Sorry, this was it. This was where I entered. I entered the trade over about here. Little clean candles up. Stop loss. Sorry, I'm having trouble finding it. I'm looking back. No, price had pushed up. I'm not into it yet. This is where I entered. Yes. My mistake. And this was where I put my stop loss. Yeah, it was something like here. It was something like this. Something like this. Anyway, I'll play it through because I'm having trouble finding it in memory. So price, what it did is it opened and it went down 10 pips straight away. Oh wait, this is too late. I was gone by then. It was in here. Yeah, that was where I took it. Took it down here. Opened and went 10 pips. Yeah, I would think this was it. Sorry. That's very poor on my behalf. Entered something like this, and on this candle, about 9:54, entered at the close. Was looking to take TP1 over here, and TP2 was down over here. Yeah, that was it. So price, as soon as I had entered into it, it was up about plus 10 pips. And then it just came back up, and I was like hesitating, wondering what to do because I really wanted to like get out at 1-to-1. Take some profits at 1-to-1. And then I thought I would move my stop loss down, and I hesitated not moving my stop loss at 10 pips. I really thought this would have a better chance. This candle here ripped into it and just took me out in full. So anyway, what I then said was I will give this trade a second chance. But I had to get going. I had somewhere to be at 10:45. So waited. Same idea, still valid. This time as price, I thought this would be roughly around the high of the day. Very good chance. Price gave a little. I'll go to the 5 minutes to skip through. Price reacted. Entered the trade more or less here on this candle as it was breaking down, and then just let it play out. So that one hit. What happened though? The way I managed this is the bummer on the way I managed it, was that I took, once I had got into this trade, once I had pushed down, I took some profit at 20 pips because I was recouping the loss on that one, and then closed in full for plus 30, which is a bit annoying because this one here had like an 80 pip potential. Had it all planned out there as well. Like I didn't move any of this TP1, TP2, nothing like that. It was purely just waiting for I traded to recoup that loss. So a bit annoying. And that was it. That was it for the day. It indeed was the high of the day. So correctly anticipated that. And the rest is history. Now, the other idea I gave was pound Aussie. And pound Aussie being copying a hammering. So pound actually was copying a hammering. Basically, some comments by Governor Bailey saying that maybe the hikes. He said that hikes were done, and it got. Well, he didn't say that, but that's what a comment got thrown around. He's saying that we might not need to hike rates, but what he actually said was basically just the same line: is that we need to be data dependent. We could be, we may, we may not be. But it didn't stop the markets from overreacting, having a sell-off. And what I was asked is like, where's a good area? I was like, 1.95 would be a fantastic area. Or the very high 1.94s. Especially when you've had like a huge sell-off already. So very nicely done that. Same thing. Europe, Euro open, very bearish. London, bearish. New York. These comments have been taken out of context. So a very good chance that New York will sweep London low and then have that correction. Why this area? Because the 4 hours really giving you the trend, and the trend is bullish as hell, and that this area is a good area of support. Yeah, look at it. Look at it. So what the idea was I just set a pending order at 1.95 and then let it go. Where was my target? Previous zones. Okay, so just looking for it to sweep the London low, take out the London high, reconnect the New York session, and that was the trade. It was plus 80. Very easy because I actually didn't even think to look until afterwards, and price was over here somewhere. So yeah, very good. So good day and overall. We shall be back for Friday. Okay, so hopefully you guys can learn something from this, learn from mistakes made, and learn from how I do some things as well. So it helps me, hopefully helps you. And I'll leave it there. Take care. Bye-bye.